Were you ready for those headlines on Nvidia and AMD?
No, I wasn't, particularly because there was reporting just a couple days ago that they had come to an agreement, the administration with Nvidia, that they weren't going to have these restrictions. Obviously, that was just a report, but it definitely took the market by surprise.
I want to show a chart which is the proportion of Nvidia's revenue that comes from China. And clearly, the chart tells a clear story. In 2022, China revenues around 26%. Currently, 2025, we're down to 13%. I think many accept that this is headed towards single digit because of the impact of technology export controls. Does that matter to you as an Nvidia investor, Denny? Do you sort of worry about that and lay awake at night thinking about Nvidia's business in China?
Well, two parts to that question. One is whether it matters to me as an investor, and two, do I lay awake thinking about China? I think the important thing is it's actually good to just get it out of the model, okay? So, I mean, we're kind of wiping it clean. We're taking a clean cut to estimates. And to your point, the revenue contribution from China has come down materially over the last few years. I think something else that's important is that there's something that's it's called the diffusion rule that is supposed to come into effect in the month of May. And effectively what that is, that just puts a quota on the number of GPUs that certain countries can actually buy. Now, one might think that potentially the diffusion rule could be relaxed somewhat. That could benefit Nvidia. The other thing that's just kind of puzzling about all of this is that in some ways, this makes no sense at all for the administration to do. And why is that? Huawei already produces a chip that's somewhat comparable to the H20 that is actually the customized chip that Nvidia has been selling in to China. And as a result, they're just giving the market to Huawei. And so they're penalizing a U.S. company by restricting a chip that's not even that competitive relative to a locally supplied chip. So, we've already thought about this, pretty extensively. We didn't know if we would get a full cut, but I think, the direction of travel was clear. Contribution from China was going to go way down. And, because we're still supply constrained, Nvidia has the benefit of being able to redirect wafers to other areas where they can actually sell more powerful chips and chips with higher gross margins.
The goal of this administration appears to be to shift more to the United States, be it localized fabrication of the core chip, assembly, whatever it may be. And so the companies will face the higher cost of doing business in this country, or they will face 25%, 35% net tariff somewhere else. What are the pros and cons of just going with what this administration was and saying, OK, we're going to do this in America?
Well, the pros are that to the extent that we actually have the capacity to manufacture leading edge chips, that's a good thing. And it's a good thing because those are the types of chips that are used in our most important industries for national security and for maintaining our competitive advantage globally as we race towards artificial general intelligence. The cons are it is more expensive. But nonetheless, you would think that the productivity gains that we get in aggregate from deploying AI probably more than offsets what the aggregate costs would be for manufacturing the chips in the United States. And I just say, thank goodness TSMC put a shovel in the ground, several years ago in Arizona, that they're actually in a position now for companies like Nvidia and AMD to actually announce that they're going to be producing leading-edge 2-nanometer chips with TSMC in Arizona, as well as configuring full systems in the United States from a manufacturing standpoint.
A story we put heavy emphasis on this week. So Nvidia is your top holding across a couple of funds, right? TSMC is always in there. You said, thank goodness that's the case, basically. But how does your thinking now change, right? Do you stick with this idea that capital expenditures will continue to grow in 25, 26, 27. The hyperscalers will continue to take from Nvidia. Or are you now going to adjust where you put your emphasis, Denny?
Well, we take the data as it comes. But most importantly, I think if you just look at the most recent comments out of Nvidia, where they just had their GTC conference, if you actually parse through the comments from ASML today, and you parse through the comments that we've heard from hyperscaler CEOs, we don't see signs of a slowdown in AI CapEx. And so now the growth may slow, but nonetheless, the signs still support healthy growth in AI CapEx. But like I said, we'll take the data as it comes. But ASML was still optimistic about AI, and it's really the lagging edge stuff, analog chips and so forth that go into industrial and auto and things like that, that still continue to be soft. And yes. I will remind you, I know this is different with the tariffs and the geopolitical situation, but just rewind the clock 1 year, and ASML, same thing happened. They missed bookings. The stock was down, and then because the bookings are really lumpy, and then bookings just reaccelerated throughout the year. And they're doing some really cool stuff. And one of the things they talked about is one of the reasons that they can continue to drive higher pricing for their EUV and high-NA EUV is because they're starting to do what's called single layer, and what that effectively does is it increases the throughput, it's more valuable, and therefore they can charge a higher price.